There's a couple reasons why you should be terrified of the Silicon Valley Bank collapse, but I want to give you some next steps so you don't have to be. You know, the first one is called no reserve banking. If you don't know this, before COVID happened, the US financial system was based on what's called fractional reserve banking. And all that means is that banks could do whatever they wanted with a portion of client deposits in order to make a profit. That all changed in March of 2020, okay, to what's called no reserve banking. That means banks can now do whatever they wanted with all client deposits. People don't, keep money in the banks for growth. They keep it in there for liquidity. If they keep it in there for growth, then that's a whole other issue. Because banks can now do whatever they want with your money, and then all of a sudden lending needs dropped in 2020, they bought assets with your money instead of lending your money. So if those assets that they invested in dropped, the banks can't handle a bunch of withdrawal requests, hence what happened to Silicon Valley Bank. And because your money is only insured up to $250,000, if you had more than that in your account, your money could literally disappear overnight. You need to remove your money from risky assets, Bitcoin, growth stocks, short-term rental properties, and you need to get your money out of the banks and into long-term, low-risk assets. Things like I invest in, like commercial real estate. And I just look at everything going on right now. High inflation, you have increased rates. The goal is to protect yourself. You don't have to be terrified, but you have to do something. And once again, I'd love to connect you where I can and help you bridge the gaps. So if you want some help, send me a message. Let me know. I can connect you with my team. More than willing to help.